Yesterday, February 23rd, I was liquidated, and we're going to talk about that today, and I'm going to show you exactly what happened. Let's jump in. All right, traders, here it is. Let's go over it. What happened? Well, I don't even know if I want to talk about it. It looks like you made it to the end of one of my videos. You know, making these videos is tough. The truth is, sometimes this happens to you in markets, and it's tough when it happens. Let me show you what exactly transpired yesterday on my USD JPY trade, which I was so right about. I called the bottom here perfectly. Price rallied, and look where it's gone. But guess what? I got left behind. And I want to show you specifically, if we zoom in here, I'm going to change it to a 2-hour chart so you can see a little bit better. Look what happened here. So this blue order is my order to go long. You can see I'm logged into my broker. I use Oanda, which link down below in the description. If you want to support the channel, sign up with Oanda using that. It's what I use here in the United States. I'm sitting there and I buy 300,000 units of USD JPY. Trade looks good, meets all my criteria for an entry, and explodes in my favor. Really quite the trade I was looking for. You know, I've been on a couple losing streaks before this, and so finally caught this really beautiful trade. Now I have to make amends here. I did actually end up making money on this trade, so I shouldn't really complain that much. But I want to talk a little bit about what happened next. So you can see right here, this red arrow, which signifies a closed out position or a sell order on my buy trade, right? So I bought over here and I sold on this red candle. So price breaks through the highs, and everything about my trading strategy involves, you know, just looking at simple market structure. So price puts in a higher high right here, and that's my signal to go ahead and trail the stop loss. Now the blue order or the blue line represents where I bought. The orange line represents where I ended up selling. And you can see what exactly happened. Price came all the way down and completely faked out this market, including myself. We took out these lows. This triggered me out of the trade for a stop loss of about $1,450, which is great. I'm not complaining. I was able to make money. That's an awesome situation. You know, I can't really complain. Or can I? Can I be really stubborn and annoying and complain anyways? Sure, that's what I'm gonna do because this is my channel.
Whoa, calm down, Jamal. Don't pull out the 9.
And look, price comes down and then explodes through the highs. And I think that this is a good lesson to talk about because, of course, this happens to all of us in trading sometimes, and it's really, really tough to deal with. And I think that that's why I'm going to talk about it. And I'm also going to break out my thesis with the dollar going forward, because even though this has happened to me where the market has left me behind and, you know, I shoulda, coulda, woulda held on and it would have been great. But, you know, I think I stand by my choice to trail stop loss here. You know, had this thing completely get crashed to the other direction, I wouldn't be complaining at all, right? So if you think about it, if I'm being completely transparent, I stuck to my rules, I stopped out for a profit, and I moved on. But now my markets have rallied past the highs here, and the dollar looks incredibly strong. So continuing on with our thought process from yesterday, I wanted to discuss a little bit of what I'm looking for going in today's Friday price action, but also going into next week. The dollar yen is a good place to start because I want to revenge this. I want to revenge trade this thing and make all my money back. I'm kidding. I don't actually want to do that too bad. But I do actually have an idea that I'm seriously considering, which is potentially looking for a re-entry on this market. Like I said, I'm going to erase my orders here. I bought, I closed, I made good money. I can't complain. The truth is, I really am just going to sort of prepare myself for a possible pullback or opportunity to get back into this market if something presents itself. So here's an updated look. We had a breakout through the highs. This level now has to be considered support. Now, if I zoom in here on the 4-hour chart, we've recently here in the start of the New York session seen an explosive move to the upside. And so if I'm drawing swing low where we found big buyers all the way to this previous swing high, we now have some interesting setups that could occur here on Friday or even going into next week, which is of course a pullback opportunity at this 38.2% retracement. I like USD JPY on the long side, and I'm going to show you why now. Check this out on the Edge Finder. So specifically, the first thing I wanted to talk about was seasonality. Seasonality is just the study month to month, historically speaking, what an asset tends to do. And if you notice over the last 10 years and the last 5 years, the month of March historically is a positive month for the dollar yen. I've got it filtered up here in the top right. I just selected USD JPY. And the interesting thing here is that by having a positive expectancy, that's going to lean me into a bullish setup going into the end of February and into March. I just skipped an entire month. You get my point, right? So that looks pretty good. But on top of that, we also have some retail sentiment I want to show you. As this thing has trended higher and higher, the retail crowd, and we can zoom in here a little bit on the edit, USD JPY, 38% of retail traders are long, whereas 62%, the majority of retail traders, are short. So I like UJ on the long side because knowing that retail traders on average are shorting something can be an inspiring thing to look to be on the other side of that trade. Because unfortunately, retail traders, when it comes to great trends, they're on the wrong side of those trends more often than not. For example, we don't have to limit just to the dollar yen. Let's look at euro dollar, which has a really crazy 71% of retail traders long on the euro. And when we go look at the euro USD, I'll tell you right off the bat, I know that this is not a chart that I want to be long. I don't know about you guys, but they've been long for the last couple of days. I don't know if I want to be long at this point as the market just continues to sell off. But the euro actually looks really attractive on the sell side as well. Not at these current levels, but being responsible and waiting for that pullback. If I draw some fibs from swing high to swing low here, we get an interesting little setup at that 50% retracement. Now, again, this is going to require some patience as I think the euro does want to head back down to this green zone here, right around 1.05. But there may be some intermediary sort of pullbacks along the way. So if price pulls back here, comes up to that 38.2 to 50% retracement, we have past resistance here. That might be a trade setup to pay attention to going into next week. Now, this is based off retail sentiment. We could also take a look specifically Euro USD on the seasonality chart that we pulled up and see if there's anything of interest there. Let me just pull up Euro USD. So here's Euro USD, and you can see February a negative month, and March and April expected to be, at least historically speaking, last 10-year average to the downside. So an interesting one to keep in mind going into next month and going into specifically next week. The forecast for the euro here to the downside here has been pretty prominent. This is mostly just our momentum scanner, but really just going along the way here. I would expect that price on a pullback could be a good sell in my personal opinion. So it's one that I'm watching. Now, another thing, I talked about this in yesterday's video, but let's recap on this USD idea. On the smart money tracker, this is tracking institutional positioning. We've talked a little bit about the little guy who is very long on counters to the dollar. What about the big money? Well, big money is long here USD. You can actually see we're looking at the COT report data, and according to the non-commercial data, institutional money is 65 approximately percent on the long side. This is an interesting red flag to try and go against the dollar right now, as big money seems to be piling into it. So I like euro dollar short, I like dollar yen long, but I want to also talk in reference to perhaps an interesting one as well, the indices, the S&P 500, which of course, as you guys often know, will recognize that usually when the dollar is coming down, the S&P 500 will rise, and when the S&P 500 is rising, the dollar will go down. Did I just reverse those? I always get those mixed up in my head as I say them out loud. 1 second, I'll show you a cool chart here. Okay, so now I've added a correlation coefficient here at the bottom of the screen, and we're crossing the DXY compared to the US dollar. And the DXY compared to the S&P 500. And what you'll notice is that usually, if we change it to a daily chart, usually what happens is there's some sort of negative correlation, meaning that when the dollar is rising, the S&P falls. When the dollar is falling, the S&P rises. Usually there exists that sort of thing. Now, recently we've had a bit of a mixed sentiment, some confusion coming in, but now things seem to be returning to normal as this dollar continues to rise, the S&P 500 taking on some serious water. And so I think that this might be an interesting thing to pay attention to if you're watching the S&P. We've got this sort of upward trend that seems to be kind of coming to a close. It, for the time being, looks pretty ugly for the S&P as it breaks through this trend line and breaks through this key level support that we had marked on the charts. I don't have any trades open on the S&P at this time. My long trades trailed out. I made some money on the way up here, but since then the markets have pretty much reversed and the S&P does not look super attractive in terms of any short-term opportunity. So as we come into today's price action, we could see the S&P 500 breaking to the downside. This will be very interesting to see how this plays out. If that dollar stays strong though, I would expect the S&P 500 could see a more steep decline, perhaps down to levels like 3,900. You also have levels like, of course, this pivotal spot here where we saw lots of strength come in start of the year, January, right? So January was big start of the year here for the S&P 500. Price could come down to retest some of these areas as it seems like sellers are in control of this market for the time being. We'll see where that goes. And again, how that plays out relative to the dollar. And another one that we should probably mention is the NASDAQ, right? NASDAQ falling through key support here. And this is a red flag for bulls, I think. You had this really strong upward push, made some good money on the way up. But now the party seems to have sort of ended for the time being. Is this going to crash back down to the lows and break through the lows? I don't know. That sounds too much like trying to look into a crystal ball. But for now, the market seems to be trending back down, looking strong to the downside, and probably not something I'm looking to go long in the short term, at least for now. So we'll see how that one plays out according to our dollar story, which again, like I said, I'm pretty bullish on until further notice. Trades that I'm interested, again, recap, looking to be long USD JPY, short Euro USD. Those are my two setups that I really like going into next week. I hope this helps. Have a great day, and we'll see you back next time. It looks like you made it to the end of one of my videos. Thank you so much for supporting my content. It really means the world to me. And down below in the description, I put together some of my best resources for aspiring traders who are looking to improve. I've got some free downloads that could help you, some broker recommendations, and if you'd like to join our Discord or get access to some of our trading software, all of that will be linked down below in the description. Thanks for watching, and we'll see you next time.